Is now a great time to be loading up on discretionary stocks? Believe it or not, history points to big upside for the group. I'm going to show you some really cool data, and then we're going to get into 3 stocks that are on my radar right now that I think are primed for upside over the long term. Let's get to it. So I'm over here at our blog. This is MAPsignals.com. And Alec Young, who writes macro for us, he did this really cool study and made the case of why you should bet on discretionary stocks. So everybody knows the S&P is down 12% year to date. Discretionary stocks are down even worse. They're down 20%. So he wanted to know, whenever discretionary stocks get crushed, do they tend to outperform going forward? So he went back all the way to 1962, and he found that to be the case. So basically, it's a big reversion trade. So whenever those stocks get crushed, they tend to swing back in a big way. So going forward over the next 12 months, you can expect, based on history, that the discretionary group will outperform the market by an average of 5.8%. So that's its blue bar right here. Now he took it a step further. And he started asking, what are the odds of the discretionary group being up 6 months from now after 2 quarters of negative GDP, right? A lot of people are talking about that. They're worried about recession. Believe it or not, there is a 100% chance, based on history, that discretionary stocks will be positive 6 months from now. All right, so it's the best performer. And so he believes that there is a really good shot that discretionary stocks are going to continue to thrive over the coming months. But it's not just that. What does our data show? Well, we see the biggest discretionary fund out there, XLY, it's finally starting to get some green buy signals, right? So that's a feather in the bull's cap. And not only that, under the surface, we can see that a handful of stocks are starting to get bought. That makes the case that discretionary could be primed for upside. So history is pointing to upside, but remember, none of this is personalized advice of any kind. We just want to make you guys better investors. Always think long term, and make sure to like and subscribe to our YouTube channel if you dig this content. All right, let's get into some stocks. Which discretionary stocks are on my radar? Well, I'm in our portal right now. I'm looking at XLY, the ETF. We're cracking this thing open. And let's look at some of these constituents, right? So you've got Amazon all the way down to GM. And you see a bunch of scores, right? So you've got these MAP scores, technical scores, and fundamental scores. So I definitely am going to be looking for some healthy companies. There's a lot to choose from here. So let's go ahead and get to the first stock on my radar. So after looking through the XLY ETF, I am zeroing in on Genuine Parts Company, ticker is GPC. The stock trades right around $152, and this is an auto parts company. They're all over the US. They got over 50,000 employees, so very big company. But why is it on my radar? You guys know that we're all about data here at MAPsignals. There's been a lot of big money inflows going into the name. And you say, what is big money? Well, these green bars are indicating that volumes are increasing as the price is increasing, right? So volumes, demand for the shares are pushing that stock higher and higher. So that is something that you want to see, right? If you're looking for a great potential long-term idea. Over here to the right, we can see that this is also a top rated stock, right? So every single week we look at thousands of stocks. If it gets a blue signal, that means that it was one of the top 20 stocks. So that tells us that it's also scoring well fundamentally, right? Fundamentals do matter. So let's go ahead and look at some of those fundamentals now. Over here on the left, so we can see 1-year sales growth of 14%. That is very, very strong. They're expected to grow their EPS over the next year, 6.6%. It does have an elevated debt to equity ratio, and the forward PE is just over 19. So that is a little bit more expensive than the market. Obviously, because the stock is near all-time highs, you can see that the technicals are very, very good across the board. I should also note that the stock also has a very attractive yield. So 2.4%. I think in this type of market, that is attractive. And so this is one company that is on my radar. And lastly, I would say they just had outstanding earnings. They raised their sales and earnings guidance across the board. That's exactly what you want. It's called a beat and raise. Keep GPC on your radar. And if you are one of these fast traders, if you want to use a trailing stop, you could go down to 143, right? So that's about $9 from where this stock is trading right now. That put it right bump, bump, bump right there. All right, let's get to the number 2 stock. So the number 2 discretionary stock that's on my radar is Ulta Beauty. The ticker is ULTA. Stock price is right around $380. And listen, they've got salon services, cosmetics, fragrance, skincare, you name it. Basically a bunch of retail outlets. And I see people going in there all the time. It's a pretty cool store. They had a deal with Target, so they're in some of their stores as well. So let's go ahead and look at the big money though. Late last year, the stock was trading very well. A lot of big money was going into the shares. The market was basically at highs. Then we had the bear market. So there has been some selling, some buying, some selling. This might look like some of your other stocks, right? Very, very volatile. But over the long run, this has been one of the best stocks in our data. So that means that it's got great fundamentals as the shares have been lifting with big money. So over the long run, I think that this stock is going to continue that long-term trend higher. So let's go ahead and look at some of those fundamentals. So this is very strong across the board. You got 1-year sales growth of 40%. You've got 1-year estimated EPS growth of 7.6%. That is very healthy. Profit margin just over 11%. It does have elevated debt, so we do want to point that out as well. But the forward PE is just under 19. I think that that is manageable. Now, where is it getting penalized? It is on the technicals, right? So it's been a couple of months since they have actually had one of those big money buy signals, and it hasn't been at a 52-week high in 110 days. So if you're not a long-termer and you say, wait a minute, where could I use a stop loss? I would use $40 on this name. So if it was to break below 340, that's basically right around here where it got sold last time in May. That could be your stop loss. Let's get to the next one. All right, the number 3 discretionary stock on my radar is Domino's Pizza. Ticker is DPZ and the stock trades right around $395. Full disclosure, I own this stock in personal and managed accounts. Very easy to understand story. They sell pizza, and I think, you know what? People are going to continue to buy and eat pizza. But let's go ahead and look at the stock. Definitely had some selling earlier this year, but we're starting to see some signs of life. And we're seeing that in other restaurant stocks as well. Now, there hasn't been too much on the top 20 list recently, but if we go back historically, this has been an outstanding long-term performer, right? So they grow their dividend, they continue to reward their shareholders, and I think over the long run, this company is going to make new highs at some point. But let's go ahead and look at these fundamentals. 1-year sales growth is just under 6%. That's okay. But the EPS growth for 1 year is expected to be right around 19%. So listen, we focus on earnings. That's very important for returns on a stock. Look, profit margin, 11.7%. That is great. It has a low debt to equity ratio. The forward PE, though, is a little elevated at 31 times. However, it is a great company, right? Just historically, it has rewarded shareholders. And look, got a couple of positives on the technicals. The last buy signal was right July 20th, and the stock is trading near its 12-week high. The stock also has a forward dividend of 1.1%. It's not too bad. Now, if you are a trader and you say, you know what, where would I use a stop loss? You could use $30. That would be right around $365 per share, right? So if it drops below that, maybe you cut your losses. But look, over the long run, this has been a tremendous, tremendous stock. So keep that one on your radar. So there you have it. History is pointing to more upside for discretionary stocks. Hey, we'll see if that actually is the case. And also I showed you 3 stocks that I believe are going to do well in the future. Hopefully that is the case. But whatever you do, make sure you do your own research. Always focus on quality stocks and think long-term. And don't forget, if you like this video and you like this unique content, make sure to like and subscribe to our YouTube channel. And I will see you guys next time.